Hey everybody, welcome back to the YouTube channel. Thank you so much for being here. I'm excited to share with you my thought process behind this trade, and essentially we are going to go in depth on this trade, why I took it, what was the reasoning, and essentially just giving you more insight on what I'm looking for when we take trades and what has happened today and the reason why. So, thank you again for being here. I am so excited to share this with you. It's going to be a good one. We're going to be talking about how I decided the draw on liquidity, what my trade was, where my entry was, and then at the end of the video, I'm going to share some secret information, and I'm excited for you guys to hear it. So, with that being said, let's jump right into the charts and get to work. All right, we're gonna start on the daily time frame. Now, we know that we had this consolidation last week and we were kind of trading around the weekly fair value gap, kind of trading inside of this zone right here. So that's kind of why we were stuck in this consolidation. However, now we have traded outside of this weekly fair value gap, and it seems that we want to be trending higher. Now, I went in with the mindset that, look, we just got out of this consolidation. It looks like we're going to be wanting to go higher. We're going to be wanting to go for that daily volume imbalance, for those weekly highs. We're essentially going higher on the daily time frame. And we can see that we had that break in market structure on Friday, and now we are just continuing to move higher. So with that, we are going into the market thinking, hey, I want to see higher price action. Let's look for some PD arrays that support that idea. Perfect. Let's jump down into the 1 hour time frame. All right. Now this, again, we traded through this weekly fair value gap. We have this new week opening gap here, but we are trading away from that new week opening gap. So that to me is saying, hey, we want to go higher. Let's go for some higher pricing today. Now, yesterday we actually had a really nice run in the afternoon. So that was awesome to see. But what I did was I marked out this 1 hour fair value gap right here. I marked this out. We also have the consequent encroachment line on it. And I wanted to see this swing low broken and took out some sell side liquidity there. But I wanted to see the rest of this 1 hour fair value gap filled in and respected. I wanted to see the market respect this 1 hour fair value gap. I wanted to see if we were going to go higher, if it's going to respect this PD array. So with that being said, we actually traded lower at the 9:30 a.m. open. We came down back into that 1 hour or that weekly fair value gap. And I allowed for this to happen only because we did have CPI news this morning, which was this spike here, came down back into that weekly fair value gap. And it looks like we were about to close below that 1 hour fair value gap. So I was watching the market. I wanted to see it respect. Remember, the bodies tell the story and the wicks do the damage. So even though the wick did break out of that 1 hour fair value gap, where did the bodies close? We actually closed above that consequent encroachment of that 1 hour fair value gap. And I was allowing for the market to even come down into this 1 hour order block right here. And because we have this long extended wick, even at halfway of this would have been fine. I didn't want to see it close below, however, so I was watching the 1 hour fair value gap to see, hey, are we going to close? What is happening? Now on the 1 hour time frame, we can see that the bodies did in fact close above the midpoint of this 1 hour fair value gap. Seeing that, I was like, perfect. This is what I wanted to see. I wanted to see that sell side liquidity traded, taken out, this 1 hour fair value gap traded to, boom. So that was kind of like my thought process. Plus, our overall analysis is we want to go higher. We're reaching for that daily volume imbalance and potentially the high of that CPI news. Why? Well, people profited on that CPI news when it went down. So whoever profited on that move, the market's now wanting to take their profits. So we're going to go higher. Perfect. Let's drop down to the 15. Perfect. So this is why I watch multiple time frames at once. I like trading the 5-minute and 1-minute chart, but I wanted to see how the 1 hour fair value gap was respected. Now on the 15-minute time frame, we can see we actually closed below it, but because we're looking at the 1 hour fair value gap, we're looking at the 1 hour candle to see, hey, is it respecting it? And it did. We did have this run down here. We traded to that high of that weekly fair value gap before moving higher. And this was also good to see. We didn't leave any fair value gaps here, which was awesome. I wanted to see the market trade back into this 15-minute fair value gap and then of course higher. But since we trade sessions, we're not going for this high right here. We're going to go for this 15-minute fair value gap for a potential profit target. So that was our draw on liquidity this morning. So we took out the sell side liquidity, traded into that higher time frame objective of the weekly fair value gap. Boom. All right, now I know my analysis is buy. I want to see the market go higher, and now we're looking for our entry. So let's drop down to the 5-minute. Now on the 5-minute time frame, we did have this sort of displacement run lower, but we stopped dead in its tracks on that weekly fair value gap. And because of that, the market traded higher, higher, higher. Now we are outside of this 1 hour fair value gap range, which is what I wanted to see. I wanted to see us stay above this 1 hour fair value gap range, but below the opening price. We had this 5-minute fair value gap right here. And when I go down to the 1-minute time frame, watch and see where that 1-minute fair value gap is. So we have this 5-minute fair value gap. Now let's go down to the 1-minute. Perfect. Where is that 1-minute fair value gap? It is in the exact same place as that 5-minute fair value gap. So we already have the confluence of 5-minute and the 1-minute fair value gap. So we traded higher, have this displacement run, and then I was waiting for the 10 o'clock time frame, which started right here. We could have entered on this inversion 1-minute fair value gap because it was also above the 1 hour consequent encroachment of that fair value gap. And look at how the body has respected the consequent encroachment of this 1-minute fair value gap as well. That is beautiful price action right there. Having this 1-minute inversion fair value gap and the body's respecting it like that, beautiful. We then traded lower one more time into that inversion fair value gap before we had this displacement move right here. And this was my entry. This 1-minute fair value gap, I wanted to see the market drop down, traded into it before moving higher, ultimately to our take profit, which is the high of that 15-minute fair value gap. Couple things here. This entry, beautiful, but it's actually an institutional order flow entry drill. What is that? That means we came to the exact high of this 1-minute fair value gap. We didn't actually trade inside of it, but we came right to the high of it. Now, a couple things here. I had a limit order set just below that high of the fair value gap because I wanted to get a better fill. I wanted to trade when we get into the fair value gap so then we can go higher. But it didn't actually go into the fair value gap. We just traded to the high of that fair value gap. So for me, that is a lesson in itself, understanding that the market is likely to trade down into this area right here, but it doesn't have to go inside. It can just tap the top and then take off. And we can see that happen right here. So Understanding, hey, we took out the sell side liquidity, building up those orders, traded into that higher time frame objective of the weekly fair value gap, displacement run. We had our entry 1 minute fair value gap at 10:04. It was created. We came down into it at 10:12. This was our entry, and we wanted to see the market continue to move higher into the fill of this 15-minute fair value gap. Now, it took us some time, but we did eventually get that fill, and now we are kind of consolidating again. Personally, this is a beautiful trade setup. I like trading Tuesdays, all right? Tuesdays are my days. I don't know why, but I like trading Tuesdays. And it's beautiful to see how this market played out. Now, if you made it to the end of the video, I'm gonna share some secret sauce with you. Here it is. When we're trading, we have to understand what the drawn liquidity is. We have to know where the drawn liquidity is, and I've kind of been talking about it throughout this video. If you had noticed, I had a directional bias. I kind of understood where I wanted to see the market go. It doesn't have to go there completely. Like, we have yet to reach these highs, which was my drawn liquidity. But having that drawn liquidity, I can trust in my trades. So I know that when I take a trade, if it is in the direction of the drawn liquidity I'm aiming for, I can trust in my trades. This has helped me be able to get into my trades and be okay with it. Being okay with, hey, I'm willing to risk this on this trade, but it's fine because I know the drawn liquidity is there. I know that we want to see it move higher, and I understand that this is my directional bias. Having that directional bias, you're gonna see more setups on the direction you want to see. So that is why I saw this trade here, because I knew I wanted to see the market continue higher. I knew where my drawn liquidity was, and having that drawn liquidity and just understanding bias and knowing, hey, I want to see this market respect this PD array right here and move higher. That is why I entered on this 1 minute fair value gap. That is why I watched the market the way I did. That is why I wanted to see the 1 hour fair value gap respected. That is why I use this as sell side liquidity and not a break of market structure, because I understand, hey, I know what the direction of the market is, and now I'm going to look at the market as that direction. Don't get me wrong, it is trading, and you will be wrong. You will have losing trades, you'll be wrong about that direction, you'll just, it's okay to be wrong. It's okay to have losing trades. But this has helped me with my confidence in entering trades, and this has helped me with understanding the market better. Having that drawn liquidity, understanding where we want to go, and following that bias for trades. So I hope you like that little secret sauce. I know I talk about it a lot, but it is important, and it is really the secret. It's just knowing where the market's going to go, understanding why it would want to go there, and yes, secret sauce. So I hope you guys loved this video. I am super excited. We got into this trade. We saw this play out beautifully. I mean, it is a Tuesday, so love my Tuesdays, what can I say? And I hope you learned something from this video. Let me know in the comments if you stuck around for the secret sauce, and let me know what you think of it. So with that being said, I hope you guys have a beautiful rest of your day, and we will talk tomorrow. Bye for now.